Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Monday morning, fresh new week. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Nigel and Surabhi. Guys, hi, good morning.
Hi, morning, folks. Well, two major events out of the way, the budget, the RBI policy. But those tariff headlines, they're definitely not stopping. So plenty to keep us busy.
Well, that's right. And it's a very special day for me because today I complete 14 years here at CNBC TV 18.
Congratulations.
It's been a long, long while. 10th of February, I recall walking into the newsroom. So very, very special day for me. It's been amazing being part of the channel. And thanks to both of you. Every morning we wake up together. So great journey. And thanks to all the well-wishers and, you know, everyone who supported me in the last 14 years. So I'm very, very excited about today, but we got plenty of trading action, so let's get straight to that.
We'll discuss where the party is
Exactly.
a little
Yeah,
later. So, all right, congratulations, Nigel. Let's just quickly run you through the top things, right? And top of mind, I'm not sure how much top of mind this is, but I just wanted to sort of get this over with. Is there a big impact because of the Delhi election victory? I mean, a lot of commentary, lots of, opinion, etc. It's sentiment positive. I mean, sentiment, mood positive. But is there any real implication from a market, durable implication for the market? I don't think so. And I think you can see that up on the GIFT Nifty, which we will put up a little later as well. But it's big news, of course. I mean, the BJP is back after 25 plus years in the national capital. So that, of course, very, very significant in that sense. But from a market standpoint, don't link it too much. Now, in just sort of straight up after that is, of course, all the tariff news flow. Trump saying, and this is, you got to contextualize when he said it, because he says one thing one day, 2 days later he says something else. So on Sunday, he essentially said that, this is yesterday, he plans to impose 25% tariffs on all imports of steel and aluminum. This is applicable in all countries. This is essentially what he said. Most exposed to these steel and aluminum tariffs, if they were to go through, are countries like Canada, Mexico, Brazil, and UAE. Actually, but even for these countries, as a percentage of the GDP, it's not much. But these are the countries most exposed if this was to come through. Then last Friday, if you have to go back, he said that he would impose something called reciprocal tariffs. Now, reciprocal tariffs are nothing but tariffs which, if they were to be imposed, US would be able to sort of impose a tariff on countries which have tariffs of, say, 10, 15, 20%, whatever the rate is, on products which they import from the US. So this is just reciprocating those tariffs. Now, the only way this can be a positive is if the countries which are being threatened with this reciprocal tariffs lower their tariff rates. So then it actually does not hurt trade, it maybe betters trade. But it's not so easy. It's not so simple. We'll have to see what really happens. He said that, a conference will be held on Monday and Tuesday, and a decision will be made sometime after that. Now, and of course, Bloomberg is reporting that tariffs are likely to go into effect soon after this conference. So he's very clear he wants to do this. It's something he's spoken about in the first term as well, and through the campaigning process when he was campaigning for a presidentship. And now it looks like it's going to happen. Now, dollar index through all of this between Friday and this morning, because after these steel and aluminum tariff news flow, it's went up a little bit more. It's gone up about 0.7% Friday and this morning. We are at about 108.4. So we'll have to see, because this is, of course, negative for emerging markets broadly. U.S. non-farm payrolls were mixed. This is the jobs number. No clear signal. Markets very hesitant to interpret data as net hawkish for the Fed. Because, I mean, we'll not go into details here, but pricing, etc., has not changed. For the full year 2025, 37 basis points worth of cut has been priced in. The first full cut from the Fed is only priced in the month of September. This is, of course, market pricing. Equities in the U.S. ended in the red, 1% in the S&P. NASDAQ was down about 1.3%. There's a very important meeting. Prime Minister Modi will meet President Trump this week, and this happens in the backdrop of tariffs, right? And we'll have to see whether, what comes off it. The one opinion is that we've already started to lower tariffs in the union budget, customs duties, etc. But we'll have to see if there is more talk around that. A plan for Russia, Ukraine. I've been sort of talking about this for the last couple of days. Maybe sometime on Friday we'll hear. Just to circle and tie in the levels here, Nifty is bounced on Friday from the 61.8% retracement, but not close on the positive. We had a slightly negative close. We need to break above 23,807 on the upside. On the way down, the level to watch is 23,443. That's the recent low. Bank Nifty support is at the low of 49,871, and the downside level is 49,569. And we need to sort of break above the high, 50,642. These are very, very near-term levels. I mean, levels, highs and lows which have been made over the last 2 or 3 days. But this is essentially what we are dealing with. A very ranged market without very much by way of triggers in that sense. Surabhi.
Absolutely. Prashant, I just want to, before I talk about Asia, I want to pick up on that point on the mixed US data that you were, referring to. Just to go into the details, why is it being interpreted as net hawkish? Because if you saw the number, the payrolls number, that actually missed estimates. If you're looking at non-farm payrolls, the number was 1.43 versus estimates of over 200,000 job increases. But it was still taken as hawkish, or still taken as strong. Why? Because the unemployment rate came down, it's trickled down to about 4% versus the estimates, which were 4.1%. And not just that, hourly wages are running at a very strong rate, and those numbers topped estimates. 4.1% year-on-year increase in hourly wages and about 0.5% month-on-month increase, and both were ahead of estimates. So wages are strong in the US. Another important point I want to just pick up on is the expectation of future inflation. And those expectations are surging in the US, and a lot of it on the back of a lot of the tariff action and the tariff noise that we're hearing. Now, this is a University of Michigan consumer survey, and it has the 1 year forward inflation expectation. And the 1 year forward inflation expectation is 4.3%. This is the February figure. Just a month back, it was at 3.3%. So clearly, consumers in the US are worried about rising cost of products and services for them with the tariff wars underway. Speaking of tariffs, China's tariffs on US goods. This was announced last week. It's kicking in today. The reciprocal tariffs that China announced, which means 15% tax on import of US coal and LNG, 10% tax on US crude oil that's coming into China, agricultural equipment, as well as certain large cars. So the tit for tat is really continuing on that front. And plus, we have to see what Mr. Trump decides to do this week, the universal 25% tariff that he's talking about. Some inflation numbers out of China as well. And after many, many months, CPI inflation in China is picking up. That number has risen about 0.5%, in the latest print, which is January, versus just about 0.1% in December. But producer level prices are still under pressure in China at the factory gate level. So the producer price inflation number, that's still in declining territory. In fact, in January, it's fallen a little more than expected, down 2.3%, minus 2.3%. For us here, it's been a week of consolidation, and it's a week where the Nifty is struggling to get past this level of 23,700 to about 800. That's become a bit of a congestion zone for the market. The last 3 trading sessions, we saw lower highs every single day, Wednesday, Thursday, Friday, where the Nifty could not conquer this level. So can it happen this week or not? Let's see. The flows are not entirely supportive, but the net selling number from the FPIs, that's come down. So that's the good news to look at. In fact, if you're looking at the net number, net sale was just about 470 crores from FPIs, and net buying by domestic institutions was about 454 crores. So at a net level, it's a lot better than we had. But if you're looking at the total tally so far this year already, the net selling, there's no respite. We thought 2025 will get a respite. That's not happened. Look at that big number, over 85,000 crores sold in the cash markets. In terms of news flow, of course, we'll have the tail enders of the earnings season. We'll talk about that. I'll once again watch out for Hitachi Energy. This is not entirely unknown by the market because they were talking about another big HVDC order, and it seems it's coming through. They've, and it's the same consortium, BHEL and Hitachi, and they've won this project from Adani Energy Solutions. This is a link for renewable energy transfer from a place in Rajasthan to Uttar Pradesh. Large order, and we know the market's gotten. I mean, the stock has been completely re-rated, Hitachi, on the back of these HVDC orders. So let's see if there's any further announcement, any further excitement on today's announcement. But yeah, Nigel, Nifty's been in a congestion zone, trying to take out 23,800, not quite there.
Well, that's right. And the global setup is a little bit gloomy, but I'm a little bit positive on the markets. And there are three big reasons out here. First is the state election outcome. Well, that is positive because there were some jitters getting into the weekend. What's going to be the outcome of the Delhi elections? A small state, but you want the BJP who's ruling at the center to rule in more states as well, because that ensures some kind of policy continuity. So that is good news. The budget 2025, it addressed we had a problem in terms of economic slowdown, and they have addressed that, and also the RBI. So when you address a problem, that's rather good news. And both the government of India as well as the RBI, they have put their hand out and they're willing to get counted. So all those three are positives. What's uncertain? Trump's tariffs. That can swing any which direction. Even if you look at some of these metal companies, yes, there's going to be tariffs, but most analysts, they're scratching their head. They're wondering which way is it going to go, because there could be a supply shortage that's going to be out there, could push up prices. But the other sense, some of these countries will start pushing most of their supplies into other markets. So Trump's tariffs is a bit of an uncertainty. And what will big central bankers like the Fed as well as the Bank of Japan do from here on? Both those 2 points, they are uncertain. Looking at the FIs, what do they do in index futures? They sold a marginal amount in the cash market, but on the future side, on the short side, they added close to around 6,000 contracts, which takes the short position now to around 1.6 lakh contracts. Remember, sometime of last week, that net short positions had come down to around 1.4 lakh contracts. That's back to a negative. The FIs are net short by around 1.6 lakhs contracts, while the clients, they are net long. That's hovering around that 1.4 lakh contracts or thereabouts. So both of them on opposite ends. The two goalposts that I'm looking at, on the upside, the 23,800 call, well, that's the important mark. And on the downside, the 23,200 put, that's the important mark. So just plugging in the numbers from the options data and looking at the technical levels, you're getting your reference point. So on the upside, this 23,800 odd mark becomes a bit of a resistance zone. But since that's seeing some writing, the 20 DMA, that's the important mark on the upside. On the downside, you had your reference point at around that 20,200 odd mark. So that's the broad range that you're looking at. The bulls will want to go ahead and, break past the 20,850 odd mark, while the bears, they are looking to go down and, in fact, look at testing those recent lows. What about the Nifty Bank? That's got a reference point at around that 49,800 odd mark, which incidentally is the recent low that we saw. And it's got its work cut out, because at around the 50,800 mark, that becomes a bit of a resistance zone. So I think it's a bit of a positive bias. You'll want the Nifty to build on to the gains. The global picture is a bit murky, but otherwise you've got cues going in favor of the bulls on the domestic front. The stock that I'm looking at is ITC Hotels. That saw massive volumes. Now it's out of the Sensex as well as of the Nifty. And volumes are very, very high. So most of that selling that had to take place, that's got absorbed. I'll keep an eye out on that stock. Nearly 5 crore shares traded on the NSE itself.
Okay, all right, got it. ITC is going to be on the radar as well. Thank you for that, Nigel. Let's get started then with the equity call of the morning. We have Aswad Damodaran coming in on the call, and he says the most expensive market in the world is India, and no amount of hand-waving about the India story can justify paying 31 times earnings, 3 times revenue, and 20 times EBITDA in the aggregate for Indian companies. Okay, that's pretty straightforward, saying the Indian market's still very expensive.
Absolutely, and that's someone who knows a thing or two about valuations, right?